My goodness, it is Thursday. It is Thursday. The whatever of March. Is it Pi Day? Not yet, right? That's tomorrow, I think. I forget. It's the 13th. Tomorrow's Pi Day. Wow, Friday Pi Day. It's something else. So, what's happening, people? Um, right now in the world of cryptos and Bitcoin. Hello. Hi. In the world of Bitcoins and cryptos, there's quite a bit of hubbub happening, right? A lot of fear, a lot of panic, a lot of hopium, a lot of fopium. People are wondering what's going to happen. Where's the prices going to go? Well, hi. בסדר, כן, בסדר, עד פתובה, כן, כן, כן. אוקיי, שיהיה יום טוב. So what's going to happen anyway? People want to know. Where is the market heading? If it started bouncing 3 days ago, why hasn't it gone to the moon yet today? Well, that's not how markets work. If you are a follower of this channel, you know. Right? If you subscribe to this channel, you watch me talk about crypto and trading, you know. The price action just does what? If anything, it follows the returns. And the returns are a product of the standard deviation of returns, which is another word for volatility. And it's not volatility of price, it's volatility of the returns. Right? The standard deviation of returns is volatility. It's not the standard deviation of price, the standard deviation of returns that is volatility. And the correlation of that standard deviation of returns to the price action, right? You take the standard deviation of returns and you correlate that to the price action, and it will show you the probability of the direction of the move on the current candle and even future candles, if you know how to read it right. What else can show you the future direction of something in trading? Well, the Alpha Trading Wolf forecast. What is the Alpha Trading Wolf forecast? It is a projection model that shows you projections of normal distributions and of Laplace distributions. And you can have it show with drift on or drift off. If you know anything about drift, you know that when you're trading low time frames, drift isn't really that relevant on low time frames. When you're trading high time frames, like when you're investing, you know, sure, it is useful. But, you know, that's because you're looking months and years into the future, not days or even weeks. I mean, yeah, if you're looking some weeks into the future, yes, it can be helpful to have it on, but the impact of drift is really felt over a period of at least quarters, and if not years, right? And it's like, you know, typically what, like 1% a year, roughly. If you actually look at, like, you know, if you measure drift as an average across all markets, not on a specific asset. Of course, you can have much higher drift on any given asset than 1%, but especially in crypto. But if you look at the actual nature of drift over, say, the past 110, 120 years, Anywhere from 0.5% to 1% is quite normal. Which is why stocks can grow at a rate of 2% a year and still be doing just fine. And because you know that you're beating the drift if you're doing that. If you're not beating the drift, well, as long as you're maintaining the growth of the drift, and you know you're okay. You're not growing, but you're not shrinking. Once you start growing less than the drift, then you got issues. Right? Like not good ones. What is going to happen with, and when I'm saying growing, I'm talking about like the company and its stock, right? So what is happening with the Bitcoin and the altcoins? And when are they going to make their big move? I see you. Hello there. Hi. Hello. Hi to you in the chat. So when is Bitcoin and altcoins and the altcoin market going to make a big move? Well, I'll tell you this. They're certainly winding up for one. If you look at the VEPS charts, if you look at how Bitcoin has been doing over the past couple of months, it's been busting out like this patch of weeds, which makes some beautiful flowers. See right here? Look at that. Look at that beautiful flower. That's right. Look at that beautiful flower. And those. Right? Very nice combination of flowers. So if you look at the probabilities and the statistics of where the asset has been moving through of the different distribution models on the weekly and lower, you can see that it's due for a good swift maneuver, especially on lower time frames. Yeah, that really is the place to be trading. Yes, like there's no question about that. I know people will, and they'll say, "Oh, just buy and hodl, buy and hodl, buy and hodl, hodl," or whatever they say. Buy and hold, buy and hold, buy and hold. Well, the problem with buying and holding is that that's not trading. No, I have no problem if you buy and hold. Why would I care what you do? I'm just saying statistically, if you call yourself a trader and you just buy a position and hold it, you're not really a trader, you're an investor, and bully for you. Congratulations, now you're an investor. But if you actually want to be a trader and make gains faster and acquire more gains faster and stack more gains faster than investing, which can take many years, and you may not have the stomach for that, then low time frames statistically are to your advantage. Because, for example, yesterday, you look at Solana or Bitcoin or whatever, right? Some asset that moved up fairly swiftly 2 days ago, and barely at all yesterday, but it did move up. Okay. On a day like 2 days ago, if you bought at the low, if you're real smart, if you're an investor and you hold it, you're like, ooh, I went up 5% or whatever, 3%. It's not going to be like that every day, obviously. If you're a trader, in that same 5% day, you could have at least made 7.5%, if not 10%. Right? At least. Why? Well, because price didn't just go straight up in a line the whole day. If you look at the 15-minute candles and lower, you'll see it went up and down, up and down, up and down, up and down, up. Right? It ended up. Similarly, yesterday, for example, I don't know, say you were trading like Bonk yesterday, okay? Like a meme coin. Yeah, it was ranging yesterday, right? Did it go straight across? Did it just go flat in a range? No, it went up and down, up and down, up and down. Significantly and up, right? Finished on the up, I think. Right? It just zigzagged all day. It finished ever so slightly above where it started. But you could have easily racked up, if you got the right trades, 15, 20%. Easily. Which the day before, you could have gotten if you just held one trade. But if you also traded on low time frames the day before, instead of 20%, you might have made 25 or 30 based on the zigzagging. Although it did mostly go up, but it still had some zigzagging. Why did it have zigzagging? Because assets always zigzag around the mean. Always. They distribute away from the means, and they mean revert to the means. It's really not complicated. They are always going to zigzag around the means. Now, sometimes they will drag the mean down much further than you thought. And if you're in the wrong position and you have leverage on, and you don't get out of your trade, you'll get wrecked. And you'll lose all that money. But if you don't do that stupid kind of behavior, if you limit your losses, and you take your profits early and often, and you're not emotionally attached to your trades, well, then you can maximize your profit taking. And that is all part of risk management, right? Risk management is bigger than that. And you need to have that first and foremost, because it's more than anything, that's what you need when you trade, right? You need to have proper risk management, which means you need to carefully consider how much risk you put on any trade, how much you're willing to lose, right? What are your profit-taking targets? You need to know that before you take a trade, right? So, for example, if I enter a trade and I decide to myself, you know what, on this trade, I want to make, based on the probabilities I'm looking at right now, I'm targeting 0.5%, 1% profit, okay? I need to make sure I have the right position in the order book, which is largely determined by my position size and the time at which I enter, and whether or not I'm entering a limit order or a market order, right? A limit order is a market-making order, and a market order is a market-taking order. When you run a market-making or market-maker order, you save on fees because you are providing liquidity to the market. When you're running a market-taking order or market-taker order, then you are a market-taker, meaning you are taking liquidity from the markets, which means you pay for the convenience of getting your orders instantly filled. You're paying a premium for that. And the reason you don't want to do that, generally speaking, is because you will have much higher fees to pay that can eat into your profits significantly. Whereas when you're a market maker, you have much lower fees. And you generally, even though you won't get your orders necessarily filled instantly, you generally will get them filled if you know what you're doing. You usually will get them filled. Are there times when you won't get them filled? Yes. In all probabilities, there are times when you won't get market maker orders filled. And you got to be careful with that, obviously. You got to make sure you pay attention when you're running your orders. Make sure what's being filled and what's not. You got to know how to manage that stuff and carefully manage it. And if it only fills part of your order, you got to keep an eye on that and make sure it doesn't fill the other part of your order somewhere that you don't want it. And you do that by restricting your your limit order to only fill orders at the price you want, right? And if it can fill it somewhere else, you don't accept it, right? And you can also restrict it by restricting your limit order to not accept order fills where the order fill would be a market taker order, right? And that way, in case the only order that it would fill is a market taker order, it simply won't fill that. It'll cancel the order. That way you don't have an issue with market fills of your orders. So where's the asset going today? Again, look at the VEPs. They will tell you all that you need to know about the direction on the low time frames, right? Which are actually the time frames that matter. So do I give you buy targets and sell targets? No, I don't. If you want to see probabilities with specific numbers, come check out our Alpha Trading live stream. To do that, you go to alphatradinghq.com/discord. Again, alphatradinghq.com/discord. And there we run live streams Monday through Saturday, starting at 11 a.m. U.S. Eastern Time. All right, guys. See you later. Have a great day. Happy trading. Cheers.